David Shapiro here, Austin real estate developer, investor, and real estate agent. And it is June, and I'm going to give you an update on what is going on in the Austin real estate market. It is quite a crazy world we seem to be living in 2020. And, you know, it feels weird talking about how strong the Austin real estate market is with everything going on. But that's the reality. So as a local expert here on it, I'm going to dive in and show you what's going on with some statistics. So this is a chart that I started back when the pandemic hit, and I just wanted to track mostly this ratio is what it started as. You can see I added other metrics as time went on. But when I realized this was going to be a thing, we were at about a 1-to-1 ratio of active listings in the city to pending listings. And again, this is within the Austin city limits, not the whole metro area. And as things started to unfold, this ratio started to tick up. And you can see over time, starting at 1.01, it ticked all the way up here to about 1.47 at the peak. So that's a pretty big jump in the number of active listings to pending listings. We've talked about this in previous videos that it is standard for the active number of listings to go up in the spring and summer. So here's a chart of what it looks like year to year. So every year you can see, let's just use 2018 as an example, 2,300, 2,500, 2,700, 3,000, 3,400, so on, it increases. And that was holding true, except you can see now that we're looking at April and May, it didn't go up. So when people are actually talking about thinking, oh my gosh, like there's going to be all these foreclosures, there's a pandemic, everything that's happening, and that we're going to see prices drop. Well, if inventory doesn't go up enough, that's not going to happen. Now, we also saw demand drop, and that's what you're going to see here in the chart, right? So listings are going up, but demand is, listings are going up slightly, but they're mostly staying steady compared to previous years. And demand is dropping, so we're seeing this ratio go up. Well, the crazy part about this is we're almost back to normal. Here's where Texas opened back up. May 1st, we're a month later, and the ratio has slowly dropped all the way down to 1.05, almost back to where it was before. But what's actually exceeded is the number of sales on a rolling 7-day period. As of today, this morning, it's 260 sales in the last 7 days. You can see that dropped all the way down 119 there on May 15th. Now, this is a lagging indicator because it takes generally 30 days to close. So this last week of sales was what was happening about a month ago when things were opening back up. People were feeling more comfortable. And you can see when this whole thing started, we were at about 200 sales, 236. So we're actually above a high of what we were doing earlier in the year. So that's a good indication for the Austin real estate market. The other thing I'm tracking on here, if you're curious, is the 7-day moving average. This column, I think, is probably the most important of COVID cases in Austin. You can see we were hovering in like the 40s. Texas opened back up, and it's slowly gone up a little bit, but we're still hovering in like the 60s. So not a huge jump considering we're a city of nearly 1 million people. And these stats are actually on Travis County, but it's probably roughly the same. And it could also be an increase from increased testing. So I'm not entirely sure. And then over here, I've been tracking New York City numbers if you're curious to see those. They've certainly flattened the curve. I would say that our curve is pretty flat. We're definitely not seeing a huge spike. All right, let's jump over to a couple other stats that I wanted to share with you. So we kind of can see what's happening with the number of active listings, and let's take a look at what the dollar volume looks like. So here in green is the active listings we're just looking at. You can see the seasonality. Listings are always lowest in the winter. They go up in the summer. Same with the number of sales generally. And you can see the trend. This is the total dollar volume. So hundreds of millions of dollars in volume is what we're talking for each month in the city of Austin. And this is, again, just residential. We're looking at condos, houses, townhomes. So you can see the standard over the last couple of years. Here in January, that's last summer, spikes. Here in January, okay, we're down here at the bottom. Again, that's a little bit higher than last January. And it starts to peak up, but then we have the pandemic and boom, it just falls off. And you actually don't really see how bad this is falling off because it looks like, okay, it just dropped here, but really it's dropping from this point up here all the way down to there. And so I'll show you what this looks like in a chart. So here's again the active number of listings and year over year for dollar volume. So you can see dollar volume for the most part goes up every month from the previous year. Occasionally you have an outlier here. So December 2018, it actually went down from December 2019. But for the most part, we're seeing either flat or an upward trend. And then all of a sudden we hit April and May and boom, falls off a cliff, down 27% from the previous year and then down 45% in total dollar volume. That's probably what you would have expected to see. And I don't think it actually emphasizes how much, because look, we were trending towards 20 and 10% up over the previous year. So this is really like probably 40 and 60% down from what we would have seen if we hadn't had a pandemic. So that's pretty substantial. Well, what does that mean? The sales numbers, they're pretty much in line there. So I think it's a lot of people putting it on hold. What we're seeing if we look at the other chart is that this ratio hasn't changed much. And so even though the dollar volume overall is going down, there's people don't want to sell during a pandemic because they don't want to have to move. So that's the difference between residential real estate and commercial real estate. And while commercial real estate is really suffering because businesses are closed, people are stuck in their homes for safety reasons. They don't want to have to leave and move. So that's keeping inventory down, keeping prices really stable for residential real estate and increasing because there just isn't enough inventory out there. So let's jump over to another interesting thing, which is what's performing better right now, houses or condos? When I say performing, was one appreciating? Is there a glut of one over another? Here's the chart of houses versus condos. I was pretty surprised that the numbers were so compelling here. So here's the active number of listings, same number that we've been looking at, except I've broken it up between houses and condos. Now there's townhouses, which is a separate category, but I figured I would just do the two most opposite, which is single family house and a condo, which can be a number of different things, but most of the city, it's going to be something where it's units stacked on top of each other. There's an elevator, that type of setup. So clearly there's more houses than there are condos, and the number months of inventory is listed here. And I take that by dividing how many active listings there are over the number of sales. So this is in the month of January 2018, there were 600 sales. So if no new homes had hit the market, it would have taken 2.8 months to sell out of these 1,700 homes. Versus condos, it would have taken 3.3 months. So there's less demand for condos, you could say. Now, what I wanted to track is this demand change over time. So the ratio of condo to house inventory, months of inventory, was about 1.16 in January of 2018. Pre-pandemic, you can see there was kind of a trend that condos, the ratio was going up. And it's probably just a fact that we're building more condos. We're also building houses, but we are building more condos than we historically have had in Austin. And as you can see, it's going up, and this is the year over year increase of this ratio changing. And then we hit the pandemic and boom, a huge change in this ratio. So I was actually surprised at what a big difference this was and how telling of that people would prefer to be in a single family home right now. They like the idea of a backyard, having their own outdoor space, even a pool potentially. And so what does this mean for you? Well, if you're looking to buy and you want to buy a condo, this could be a great time for that. I don't think urbanization is going away entirely. I think this is a temporary trend, and that once we're past the pandemic, things are going to return back to normal. People are like the idea of living downtown. They're not living downtown mostly, at least the people I know, because of the commute. They're living there for the lifestyle, the other things other than work, all of the amenities that a large city has to offer. I think single family is going to continue on this trend. I don't think there's going to be some like glut of single family when all of a sudden this pandemic goes away, people can move back to the cities. So I think long-term single family is a great buy. If you're looking to sell, single family right now is hot. Condo, it's not the ideal market to probably be selling your condo, but if your lifestyle demands it, then, every situation is different. The thing about real estate is it is local and not just city of Austin, like neighborhood specific. So a condo in one neighborhood is going to perform differently than a condo in another. So that's where reaching out to me and just chatting about the specifics And I love drilling into the data. Sometimes it's hard when you get too narrow. Pulling this kind of data for a specific neighborhood, there's just not enough results. There's not enough data points for us to have any meaningful statistical data there. So this is what's going on in Austin. Overall, the market's really strong. Anecdotally, I can tell you that I've had clients in multiple offer situations just in the last couple of weeks. We had a client interested in a property yesterday. When I reached out to the agent, they already had 15 offers. So things are the way that I would have anticipated them to be had there been no pandemic, in terms of like the feel of the market, the number of offers that are out there, the number of buyers. So it is very competitive. Couple side things that from listening to an economist that I follow, there is this potential move of people from larger cities coming to second tier cities like Austin. I heard it mentioned on ABC News. They called out Austin specifically. And one of the things is some of these cities like New York, the density could be in the tens of thousands of people per acre. One of our densest neighborhoods is downtown. That's 700 people per acre. Most of Austin, it's about 7 people per acre. So even though we are a city, we are not as dense. We don't have the urbanization, the urban feel that New York City has. We're still semi-urban, and there's things that are walkable and all these amenities, and also the price point's way nicer. A condo in New York City, for the same 2-bedroom, you could get a 2,500 square foot house, a 10-minute bike ride to downtown that's relatively new with a garage, with a yard. So I think there's a lot of reasons why Austin is kind of a no-brainer for a lot of people. In terms of timing of buying, now is a great time because the rates are really low. I have a client that's under contract on a house and he got a 2.75% interest rate for a 30-year fixed mortgage. That is crazy. I didn't think we were going to be getting down to those types of rates. So that's a huge positive. Also, one of the things this economist mentioned was that there is a chance if some foreclosures come up, and foreclosures in Austin, this is a question I get, are there going to be a lot of foreclosures in Austin? I don't see that being a thing. Most people have so much equity in their home. It's really easy for them just to list it on the market and sell it. So why would they get in a situation where they're getting foreclosed on? It will happen. There's always foreclosures, even in great markets, but I don't think there's going to be a huge uptick of that here. There might be in other cities, and lenders, for the most part, it's like a national thing, a lot of these requirements. So if there is an uptick in foreclosures and lenders are getting worried, they might tighten their guidelines. So over time here, the guidelines actually might get tougher to qualify. So what we do know is right now, they are not as loose as it was in 2007 that led to the housing crash. That is for sure. There's none of these no doc, no verification loans. They are certainly verifying documents. They're verifying employment. They might do further verifications of employment, several, to just make sure people still have their jobs if that's a concern. But overall, it is a good time to be buying. I don't foresee that we're going to see a downturn in the Austin real estate market. There's just too much momentum here. Those are my thoughts on the Austin real estate market. If you have any questions or if you want to meet with me about buying or selling, please reach out, david@shapirore.com.